traders, how are you? Happy Tuesday. I'm used to say happy Monday, but in this week, holidays all around, so happy Tuesday. Wonderful week to all. Please give me some okay that you can hear me, that you can see my screen. Thank you very much. Thank you. I hope you guys enjoyed your weekend. Some of you must have still enjoying good weather. It's getting colder here, so if you still lucky to have some warm days, enjoy that. We already missed them. So let's begin. For all those of you who watch the meeting for the first time, first of all, welcome to the family. Quick explanation of what's going on. This is the members area. Please make sure to watch the video tour to understand how to use all this wonderful material we have for you. The main things that you will on daily routine want to pay attention to, or weekly routine, is of course the live trading rooms recordings with the trading report. That's the place to start with, recommended webinars. Okay, here you can find the free SPT strategy to trade. Basically just go over that. Not going to summarize that. And this is a trading report, the summary of the live meetings. Make sure you watch this video that explains how to use the report in your favor, the list of the most important webinars to understand our terms, the watch list, where you simply, what you have to do is to click on the image and it opens for you, and all the time frames. Basically you get the explanation what's to do. Below in the comments, a little deeper explanation of the technical analysis. What do we have there? And that's pretty much it. All the markets here are broken into categories, crypto market as well. Okay, that's pretty much it. So once again, welcome to the family. Let's start in a second. Today, where is that? Here we go. Okay, so let's start with the euro dollar, a pair that we have been trading to the upside previous week. Let's see what does this pair have for us for the coming week. So according to the weekly, we are potentially dancing here in a triple cycle with a bullish divergence taking place. Pretty strong supportive area, as we can see here. There is still gap that might be closed in the future. Daily cycle had a triple cycle down for us in the last of the weekly legs, bullish divergence in play, and we expect corrective cycle. Corrective cycle could be two waves. Corrective cycle could be any sort of a range. This or other way around, our plan was buys. We got it. Previous week provided us the opportunity to rally. Right? So far, so good. So the question is, what's next? Now the daily divergence, the last divergence in play, is a bearish hidden divergence. Are we going to trade it? No, because it's against the weekly expectations. But it definitely gives us here some sort of red bulb, right? Be careful. Be careful sign. What does that mean? That the daily should be, because of the daily divergence, 4 hours should be corrective. How the 4 hour could be corrective? Two waves or a range. Now, if that's the case, and the daily had the first leg upside, then this has to be a structure or a cycle by itself on the 4 hour. We definitely can break it into a structure here of higher highs, higher lows, right? And that means as long as the area of 61.8 Fibonacci of this measurement holds, right, we are looking for retraces and buys. This could turn to be a bullish hidden divergence. That could turn to be the two waves. Therefore, break above the falling trend line would bring, or should bring, another bullish pressure we might enjoy from. All right, that's pretty much it. So the new setup for this week is this trend line currently, and the reason for that is because we do not know if the bullish hidden divergence would be completed and created and verified on the lower time frame. That's why break of the above the trend line is currently at the beginning of the week the right setup to work with. So once the two waves down completed, we break above the trend line. That's our sign to start looking on the buys. Okay, that's for the euro dollar. Euro pound, our rock star from the previous week. We got this setup, break below the trend line. Again, you have all the setups in the report. As always, summary to the discussions of the live trading rooms. Okay, just go to the report, you will find everything there. So we got a breakout and all the rest is history. The pair is moving, and when this one is moving, it's moving. So what's with this pair? So far so good. We do need to pay attention to the levels. Currently 61.8. Of course, if it breaks through this level, the pressure is going to be all the way next to the down to the next area, right? So sell the rallies was and remains the plan. Sell the breakout was the previous week plan. This week is already sell the rallies. We got this opportunity, which was formed on the 1 hour chart as a bearish hidden divergence right here, and again a beautiful sell scene. Sell the rallies would be the plan here. Now we definitely need to pay attention to the 1 hour chart developing bearish trending structure, this sort, because that could lead for retraces and further continuation down. So for us, sells remains the direction. Sell the rallies is the plan if you are not involved, and for all those who are involved, there's no need to do anything else. Just write it, right? Write and manage. That's pretty much it. The bearish view remains. This trend line I just drew is the invalidation. The dynamic resistance that break above would invalidate the bearish pressure. So nothing changed for us for this pair. We continue in the bearish direction, expecting it further down. Euro versus the Kiwi is back on play. So quick reminder, what do we have here on this pair? The bullish structure from the long term. This was the one. We expect further continuation, but we were facing two waves on the weekly where we expected correction, and then two waves on the daily where we expected correction. Correction could be two waves, correction could be a range, and here we got the range. This range was broken yesterday, continues very nicely today. It was covered on Saturday, I think, when I released the weekly forecast, or Sunday, where was it? Saturday, yes. Saturday. Anyway, break above that should be a bullish sign. So we got the breakout. We are under bullish sign. And as long as there are no reversals, the bullish pressure continues. What should we pay attention to is still the level of the 61.8, which might become problematic. As you can see here, this is some massive area, magnet zone, right? And we might face issues here. But until then, no reversal signs currently. Everything looks yet bullish, right? The daily the weekly and the 4-hour chart after the break and the retest of the beautiful triangle pattern, as long as it is the case, the pressure we trade is to the upside towards 176 plus. Then we will see, because likely to assume that somewhere here we would face false breakouts and lower lows. Then of course it will be a change, or at least a closure of the buys. Until then, our plan is bullish. And the last of the euros, we have the euro versus the franc. Another pair we are enjoying a beautiful ride. But the idea here is very simple. Bullish divergence from the weekly in a double cycle. Range second leg. And daily that fits in perfectly in this triple cycle. 1, 2, 3. With beautiful Fibonacci levels, beautiful divergence, and corrective cycle in play. How the corrective cycle could look like, the waves or a range. Currently it fits in both, right? And we do not have signs yet against. For our chart on this rally, it's a bullish structure, higher highs, higher lows, no doubts, no divergence, right? Therefore, the plan for us, buy retraces. Still ongoing. And we are aiming here. At least the clearance zone, the 38.2, ideally up to 50% Fibonacci retrace of the daily triple cycle. By the way, if we duplicate the Fibonacci's on the weekly double cycle, check out what we will get. A very interesting fact that the 38.2 of the weekly would bring us towards the next daily corrective cycle level, which is 61.8, right? So of this triple. So if we beat this zone, our next area for this pair is going to be all the way here. Will that happen? We don't know. That's why we are currently following step by step, trading it step by step. Meanwhile, no signs against. It looks good. It rides good. It behaves good. And as long as this trend line holds, we are bullish. Why this trend line? Very simple. Because this is the current developing daily structure of ABCD. Break below that would suggest a trend continuation to the next levels of the developing cycle. Okay, so very, very important to remember our invalidation, and we are bullish as long as the trend line basically holds. So that's for the euro pairs. That's the list. Any questions? Is there any question about any of the euro guys? The ones that are not included for one reason: technical combination of cycles. Pairs I cannot find a good match of cycles, I don't trade. Pretty simple, right? So that's it. EuroCAD is on the list, but I want to see the breakout first, because we do have the structure of higher highs, higher lows. I dislike the current movement of this massive movement, so I want to see what we get. And if we get the breakout with a bullish divergence, then we go in a bullish direction. If not, we will have to stop and wait and see how it develops. Maybe we're gonna hit here some oranging structure. Anyway, too early to decide here. So as for now, not in the list. Good. So we continue to the next ones, pounds. And for the pound, I have only one additional one. This is the pound kiwi, not a new pair for us. We are bullish from the last week. Break above the trend line. Now, for all those of you who are involved, all I have to say, guys, is enjoy. Why? Because look at this ride we took here. This pair, and the more experienced traders of you would agree with me, when it moves, it moves. That takes us through journeys with huge loads of pipsage. It's amazing. So what's next with this pair? We continue in our buy direction. Nothing changed. And we are trading currently the next developing leg to the upside. As you can see, it has the room further. Why are we bullish? Want to remind you that we got the structure of the higher highs, higher lows here. Two waves retrace, bullish, hidden divergence, and all the rest, history. It fits perfectly in the weekly expectations, right? That's why we are bullish here. Nothing else to add, nothing else to say, nothing else to do. Just ride the buys. Pretty much it. Why there is no other pounds? That's a good question to ask here. First of all, we have two, the euro pound and the pound kiwi. In the current market conditions, where every single day is super sensitive, all the Brexit related news and rumors released on daily basis, I don't think it makes sense to overexpose to the pounds. Yes, they all can pay and pay massively if they move. 100% correct. However, if they will decide to do the opposite move, it's going to be super painful. And you don't want to be dependent on randomness, on speculations. We trade facts, right? So currently all the pounds, doesn't matter which one you choose, pound kiwi, pound Aussie, pound CAD, pound franc, pound yen, whatever you choose, they all will show you the same. Will that stay this way? Maybe, right? But if not, as I said before, you do not want to wake up one day to a randomness and regret for every single step. So as much as it's tempting and seducing to think about how big the profits could make, always remember the risk is the one that you should control first of all. Profits will follow accordingly, but the risk is what you have to control first of all. Not the wish to make more profits, not the wish to make fast profits, not the dream levels or the big fishes you try to catch in the market. No, the risk is what you have to control. As excited profits could be, the losses would have much stronger impact on you as a trader. So control your risks and losses, profits will follow. So for the pound kiwi is the one that was chosen as for the beginning of the week. We're riding here beautiful ride since previous week. We have the pound kiwi and the euro pound, and that's enough. Now we are into the Pacifics. On the Australian, there are two pairs we are dealing with, Aussie for this week, Aussie franc and Aussie kiwi is back on the list. Aussie dollar is removed on the list. Just quick reminder, what do we have on the Aussie dollar? We have been trading, let me just upload it here. we have been trading the two waves direction to the upside. Corrective cycle on the 4-hour chart, right? Corrective to what? Corrective to the daily double cycle and the bullish divergence. Here we are. So we got these two waves. Of course, you can see them better on the 4-hour chart. Here we are. We got that. We have reached the clearance area and we developed a bearish divergence. Why it's clever to make a cash out or at least partial cash out here or any other sort of management? Because two waves could easily fit in what? In ABCD structure as a corrective. And if we break below the line, definitely the game is over. That's why, as the week was developing, again, we didn't have a session yesterday, but it was discussed in the weekly forecast in a pre-week preparation, before the week start preparation, right? This is the place to abandon. Tibor, I think it was you, right? Asking me on YouTube about the Aussie dollar. So the idea here is very beautiful, and you are right. Just want you to remember a very straightforward thing. Every cycle you work with has to have these conditions: level, divergence, verification. Level you have, divergence you have, verification is what you get on the 1-hour chart. If you can match each of the legs as a cycle by itself, of course with the correct rules, and in that case you can, right? Then this is a tradable cycle, meaning if you get a setup here, you can trade it. Okay, just remember that for whatever you do in the next, that's the 3 steps you want to work with. Aggressive, yes, because you are against the higher time frame. Tradable, of course, yes, if you can match the 3 conditions: level, divergence, and verification, the lower time frame, you have a tradable cycle. So the Aussie dollar currently is not on my list due to this fact exactly, as it's a completed cycle by itself, which also fits the ABCD structure, and that might be a continuation lower if it breaks further. That's why currently my view on the Aussie dollar is neutral. We enjoyed the ride previous week, game over. Now let's see where the market decides to take us to. Okay, you are very welcome, Tibor. What are the Aussies we have on the list? Aussie franc, we continue with the ride here. Want to remind you, bullish since this breakout. No, unchanged. Nothing else to say. Invalidation is this trend line. The reason, if it's breaking, that might turn to be triple double here. It's a bad drawing I have here. Hold on. Here, triple and then double. If we break below, that will be a very suspicious sign of a triple double pattern. We definitely don't want to deal with that. As long as we are holding, the expectations are further. So we continue with the bullish direction, expecting a corrective cycle to the weekly one that we work with. Pardon, here. Okay. There are many ways to work with this cycle. So we expect 1, 2, and that's what we are developing on a daily currently. So as long as the structure holds, we are bullish. And the one that is back in the game, Aussie versus the Kiwi, provided us the structure of the triple double on the daily and the bullish hidden divergence gives us the buys. Now the 4-hour chart had this structure. Bullish divergence was developing only on the last part, and this is where it became little suspicious, because it could easily be interpreted here as a possible triple-double. But since this trend line was broken to the upside, the Aussie Kiwi becomes bullish once again. And as long as this low holds, this low represents the daily bullish hidden divergence. And right now we are creating here some sort of higher highs, higher lows on the, you can see it much better on the lower time frame. 4-hour chart break of the trend line, 1-hour chart you can find the structure. So here, way clearer, right? So this is one, and there are many ways you can work with that. So the idea here is buy retraces. What do we want to protect? 61.8. We don't want one shot below. One straight move below would be a very suspicious sign. We will prefer to avoid it, right? And that's pretty much it. Straightforward. Until then, buy retraces is our plan. Expectations, well, if that is the beginning of the next leg, we have a lot of room. So let's see if Mr. Market would provide us what we want to see. The higher time frame cycles fit. So let's see. Turn of Mr. Market to speak. And that's from the Aussies. New Zealandians, there is one pair in today's list, that's the New Zealandian dollar. But before, we have been trading the New Zealandian Canadian previous week. The idea was buy retraces. We got a retrace, we got a little rally, and it's all. Then we got a bearish divergence, and more important here, we got not just bearish divergence on the 4-hour, but also a bearish hidden divergence on the daily. This is where we have two time frames against the direction and the cycles we were looking to trade, and in that case it's game over. So the Kiwi CAD, well, it was finished previous week, just want to update the current list. It was on the plan for us. And the New Zealandian dollar is the one that is still on the list for us. What do we have on this pair? Bullish structure of the higher highs, higher lows, two waves correction, bullish structure, break above this trend line, and we expect a further continuation upside. Why is the direction upside is what we trade? The daily had this cycle, so we expect correction towards 38.2. Bullish offers a weekly offers a bullish divergence as well. Bullish divergence here in play. Trend line was broken as well. Higher highs start to create as well, and the 4-hour is a bullish structure. So for us, break above this trend line, and we are after the buys. Of course, we have to keep in mind that the pair could simply move inside this range. Also a possibility, right? Range is also corrective cycle, but it doesn't change anything here because our goal is looking for the buys. 61.8 is not relevant in this case because it's not one shot movement, it's two waves. Therefore, we invalidate the low. Right? The break below the last low right here would invalidate the plan. And that's from the New Zealandian. The last one for the Forex for today is the dollar yen, a pair that we did not trade on the previous week, but we do this week. We have the double cycle from the weekly that suggests us 38.2 higher as the target. Daily should be developing cycle in that case, and it does. First leg, second leg developing. First leg is a structure of higher highs, higher lows on the 4-hour chart, 2 waves retrace, right? Bullish hidden divergence for trend continuation. 4-hour chart verified that, of course. We are building here a structure of higher highs, higher lows. Game over. It's bullish. The expectations for this pair are, as we saw, closer to 110, which is the weekly 38.2. It's right here somewhere. And the duplication of the daily cycle, it's right there. So we are bullish as long as there are no signs against. Nothing else to do here. Bullish it is. Okay, that's dollar yen. Tibor, what do I think about the Kiwi yen? Personally, I think to the upside there as well. Only reason I don't include it, I dislike the current way it builds up on the weekly time frame, and the fact that the daily most likely is a range. It doesn't have other structure here, so it's now it's a miss. I would prefer to work with that, but again, it looks bullish. A bit I dislike it, to be honest. I prefer other pairs, just for the reason I couldn't fit clear cycle structure. So that's pretty much it. Okay, so that's for the forex pairs that we have for the beginning of the week. Commodities, natural gas, we are running our buys unchanged. Nothing changed for us. That's still the plan. We are still trading this daily, expecting the second leg correction to the weekly triple descending. So we are running here. And the gold, we are bearish. Quick reminder, the bearish channel is what we are working with here. So far, so good. That's pretty much it. I have nothing else to say here. This is where we got our last divergence in play, and that's all. C'est tout. Okay. So the expectations are further to the downside. Ideally, we are going to correct towards the 38.2 down to 50 of the daily triple cycle. What is that? Buyer. A great stock we are involved with here. Let's take a look here on the, where is the buyer for us here? The idea buys in a weekly cycle, okay, special cycle. We expect further continuation upside. As long as this trend line holds, and the reason for the trend line is because, once again, if it breaks below, it would be just a BCD, and then we expect further continuation down, right? But we got a bullish hidden divergence here for trend continuation in the weekly cycle, and here we are. Still a beautiful bounce, by the way, right? 4-hour chart trend line breakout suggests a beautiful move. So bullish it was and remains for us. I have nothing else to say here, guys. That's an analysis we are following for a long time now, right? So really have nothing else to mention here. Okay, and the cryptos is what we have. Ethereum versus the Bitcoin, we have been trading it to the upside. Right now, 2 time frames against on the divergence. Double cycle, right? It's a double wave, ABCD, bearish divergence. 4-hour chart verifies each of the legs of the cycle by itself. Game over. So we remove that from the list. Profited, I just remind you, we are from here, right? Previous week we discussed about the partial cash outs. Right now, 2 time frames against, and we start to create lower lows. Game over. And the last one we have on our list, cryptos. Here, that was our plan, right? Higher, oh no, sorry, that's the Ethereum. Where is the Ripple? Here. Ripple, we are after buy retraces. Let's check out what's going on with that. Ripple, USD. Why it's not? Oh, USD. So we got the retrace, bullish hidden divergence, boom. Further continuation, right? Worked perfectly for us. So, and what's now with this pair? Now it just expanded structure, right? Now, but now we are facing a divergence against. Great place for cash out, or at least partials. And the idea is the same: retraces and buys. Daily broke the falling trend line, a beautiful sign by itself for the longer run, right? So we want retest and buys as long as we remain above the trend, the last low. Okay, so that's pretty much it. That's pretty much it, guys. Questions? If you have any question about anything discussed so far, please let me know. Covered. Europound was covered at the beginning, so if you missed it, just please rewatch the recording. Okay, not going to repeat that. So guys, once again, just want to remind you the very important thing here. The way I work, and you know that, is synchronizations among timeframes. And the way I synchronize personally doesn't mean that's the only way. No, this is my way. It's cycles with divergences. I want to see cycles from the bigger time frame because they define me the direction. I want to verify them on the lower time frame and possibly to trade them even on lower time frame than that, right? Always working with the scale of 3 time frames. So weekly, daily 4 hour, or daily 4 hour, 1 hour, or 4 hour, 1 hour, 15 minutes, right? Up to you. But of course, the lower you trade, the more aggressive it is. The reason for that is very simple, as you understand. The money that is involved on the higher time frame is much more significant than it is on the lower time frame, right? And where more money is involved, our chances to be part of it are bigger. Very simple logic. And so when you work, it doesn't matter if it's cycles or Elliott waves or just divergences or any other sort of analysis you make, it doesn't matter. But make sure you have 3 time frames synchronized in the same direction. The higher one to define the direction, the lower one to verify and fit in. Why it's important? Because when you have 3 time frames developing in the same direction and synchronized in the same direction for you, that means the 3 different scales of money flow working on the options or the futures, defining the future expected levels. That's the most powerful thing you can work with. 3 different scales of money flow synchronized in the same direction, giving you the future expirations or future expectations at price X, give you better chances and better odds to trade this direction correctly. And in the business of numbers, business of statistics and probabilities, like trading, this is exactly what it is, right? Business of statistics and probabilities. That's what you want. You want to trade where your chances are stronger. That's all. So when you do your practice, when you do your trainings, keep that in mind and remember, you want to be where your chances are. Okay, and then when you have your analysis and you prepare your direction, it does not matter what strategy or system or robots or signals or whatever it is of the sources you use in this direction. But when you know your expected direction, anticipated direction, you know your validation and invalidation, your chances would be much stronger, much bigger. And then to trade these directions would simply increase your chance to end up as profitable in your trades. Very simple. Okay. Mohammed, is this strategy profitable? Which strategy? What of the strategies? I was talking about analyzing based on cycles, synchronizing the 3 time frames. The strategy you trade should be in the direction that you analyze the markets. Strategy by itself, doesn't matter how good it is, would never make you money. Okay? The car, any car, doesn't matter how good it is or how expensive it is, if you don't know how to drive safely, doesn't matter how good your car is, you're under risk of accident or whatever it is. Right? Same with trading. It doesn't matter how expensive the tools you work with or anything like that. The analysis, the preparation of the direction that you do, that's what will define if you trade the correct directions or not. So that's just wanted to give you some thoughts for the week, guys. And thank you very much for being here. I wish you a wonderful trading week. And I'll see you in the telegrams. I'm away this week until Friday, so I'll see you a bit less. But would be there around for you. My team is there to help with anything you need. So that's all. Thank you, guys. Have a wonderful week. Ciao for now.